often hear the term a robust capex push by the government that is supposed to spur and drive the economy. But what exactly do we mean when we say capex? Yes, it does mean capital expenditure. That is the money that is collected by the government and how they choose to then spend it in their tangible or intangible assets. Now, this means that they have a plan in place and they want to use this money, be it for infrastructure, railway, and the likes. And that's where they plan to put this money. Often in the budget, we hear that there is an increase in outlay for this expenditure. And we've seen that grow quite substantially over the years in FY21. If I have to take so, it was just 4.1 lakh crore. Last time around, that was increased to about 10 lakh crore rupees. And the hope is that in the 2024 budget as well, there will be some announcement that will really push this further. They're looking at a hike of anywhere close to 15 to 20%. So that is the kind of rumor that we are going around with. But let's discuss what exactly we mean by capex and where the government really gets this money from firstly and how they intend to spend it through the fiscal year. And joining me to get into the details of this is Santosh Nair, our executive editor at Money Control. Thanks so much, Santosh, for speaking with us. Let's get the basics out of the way firstly. We know what capex is. We've heard this term often, but where exactly does this money come from? Where does the government get into the details? It also encompasses right from government borrowings to bonds, treasury. What all are we talking about when we just mention the word capex?
So there are two ways in which the government can raise money for capex. One is tax revenues, and the second one is through borrowings. So these are the two major sources for the government. So when the government's expenditure exceeds that of its income, that is when typically you get a deficit. So in this case, in capex, you'll see the government spending primarily on building hard assets, which is roads, ports, and railways, where there's been a significant allocation last year. These are the hard assets. This has a multiplier effect because it helps create jobs. Then there is also, it goes into building financial assets. Often the government invests into public sector undertakings.
Right.
Besides building hard assets, money also goes into education, defense, healthcare. So these are some of the broad buckets of spending under capex.
Right. So who are the various stakeholders when it comes to this capex? You did mention a couple of broader industries that the money really goes to, but give us more details and as to where all does the money firstly come in from as well as get spent out in.
So there are three pillars of capex. One is household, one is corporate, and the third one is government, which at this point is the biggest driver. So let's examine them one by one. So when you are talking about household capex, a large part of it mainly goes into real estate. So then of course you also have cars and other kind of stuff, but a big chunk actually goes into real estate. So there the trend that we are seeing right now, at least from what anecdotal evidence is suggesting, is that you're seeing very strong demand for luxury housing. So there's a lot of demand at the higher end of the market, but not so much at the affordable end. So there's it's a mixed trend that you're seeing there. Then you have the corporate capex, which is corporate expanding their capacities. They have been a little slow because again here it's anecdotal evidence that they are a little not very certain about demand at this point of time and how the global situation will play out. So they have not been going about it in an aggressive manner. Yes, they are doing, they are expanding capacity, but not as aggressively as you had seen earlier during the bull market of 2007-8. So they are a little more guarded at this point in time.
Right.
Lastly, we have the government, which has been doing much of the heavy lifting. They've done a fantastic job. And it's not just the central government. You've also seen the state government going aggressively for capex. And that also partly could have to do with the fact that the central government has been giving incentives to the state government to for capex spent, which the state governments have been making full use of. So at this point, very clearly, it's government which is doing much of the heavy lifting in capex. Then you have corporates and lastly households.
Right. Now also let's break down this term. We often hear of front loading of this capex. What exactly do we mean when that word is used there? Because people might not know this. So for the common man, what really are we talking about?
So that basically means that if the government has earmarked a certain portion to be spent on capex, uh, it can be done in multiple ways. Either you can spread it evenly across the budget year,
Right.
or you can spend a good chunk of it in the early part of the year. There could be many reasons for that. One could be that you need to stimulate the economy immediately.
Right.
The other could be that probably interest rates are low, and you might want to, take advantage of that before it starts moving up again. That's a
Right.
key factor. That is, if the government decides to spend or allocate much, it allocates the money. Of course, if it decides to spend that money during the early part of the year, then it's called front loading. Backloading is when it says that, okay, this is the amount that's been earmarked, but let's spend it towards the end of the year. Now, in this case, you have interest rates which are quite high, but they're likely to come off
Down.
as the year progresses, because there is talk already that the Fed may cut rates, and once the Fed does it, you will also have the RBI cutting rates. So interest rates clearly are set to go lower. So that could be one consideration. But lastly, you must also remember that the government is running a very high fiscal deficit at this point in time. It has committed to bringing it down to about 4.5%. Right now it's at 5.9%. It's committed to bringing it down to about 4.5% by FY 25-26. So that's a fairly stiff target. So either you can do it by increasing taxes, but then if you increase taxes too much, there is a chance that it could hurt demand also.
True.
The other way is that you could cut back on some of your expenditures. That is the other way. So it's not clear at this point what path the government may choose to take.
And given the fact that we are in an election here, the spending might, in fact, probably push that line. And if the government does choose to be populist at this point, it might then, in fact, want to spend that money also in the later half, like how you just mentioned about, if they do come to power, at least that's what the consensus at this point is, what it looks like. So if it is that populist budget, where exactly, how would things shape up?
Well, if it's a populist budget, I think there would be a fair bit of allocation for rural, because that is where the stress obviously seems to be. So the government may have to do something there. In 2019, now if you look at the previous two interim budgets, one in 2014 and the other one in 2019, both were populist. Actually, they are not meant to be. It's not a full-fledged budget actually, but they've been used as an election tool first by the UPA, then the NDA also followed suit. So if you recall, the then Finance Minister Piyush Goyal had raised the income tax ceiling for there were some rebates announced.
Yes.
So there is the speculation here is that you could have something similar there also. Now again, but if you look on the other side, the government is riding high at this point. It has won the state elections convincingly. So if it is indeed certain of coming to power, then it remains to be seen whether they would decide to defer some of these SOPs instead of announcing it right now, because the economy is doing well, government's popularity is high. So, would they want to do something right now this year, or do it towards, let's say, the end of the term if they do come to power?
Right. So we'll have to wait and see what really comes out in terms of announcements, as well as how the government then plans to implement it eventually if they do come back to power. But my final question to you is regarding bonds, because that also makes some part of how the government works in its function and where it gets to spend. There is going to be India going to be included into JP Morgan's government bond index by June this year. How much will that really change? In fact, also now speculation that Bloomberg too might add India. How much does that really make a difference to the money coming into the government's coffers? Are we looking at a good enough amount, and could they really, bank on something like this?
So, Stacey, when typically any country's bonds get included in a global bond index, more global investors, international investors, start looking at the country. And now you also have a situation right now where India's economic performance is much better than that of most other countries. So clearly there will be more interest. So what the inclusion in a bond index typically does, the way it works over the longer term, is that when more investors participate, which means that there's more demand for the bonds, the government will be able to raise money at a lower cost. That's one advantage. Secondly, when you have dollars flowing in through these bonds,
Right.
that will also lend a certain stability to the currency. So that's the second big advantage. And thirdly, if you have currency stability and you have also lower borrowing costs, then at some point it could also result in a rating upgrade. Of course, none of this is going to play out immediately. These all play out over time. But these are some of the ways in which the inclusion of a country's bonds in a global bond index, the way it changes the situation on the ground.
Right. Santa, my final question is how much do you think there could be a change in this number? We are already at 3% to GDP when it comes to capex. Do you think the government would want to really take a chance and increase that or hike this amount for this coming budget?
It remains to be. It's still very hard to guess where, which way they would like to play it. Let fiscal deficit run for some more time, push growth aggressively, or the growth is comfortable enough. So let's not really try to stretch things and instead focus on the fiscal deficit. So it's anybody's guess. I mean, it's very hard to say, Stacey.
Right. So at this point, we'll have to just wait for Nirmala Sitharaman, the finance minister, to give us what direction she's really going to take. But come 1st of Feb, that's where we're going to get all those announcements, and you should be tuning into Money Control for all of those details.